If you enjoy watching news about business and the economy, you may have noticed that experts, economists, analysts, and well-known personalities from the financial sector are all warning that a financial crisis and a severe recession are on the horizon. For those ill-prepared, recession means looming financial devastation. But, in fact, you can actually come out on the other side in a much better position if you know exactly what moves to take and how to act on it. Make sure to watch the whole video because a few extra minutes of research on your part could translate into once-in-a-lifetime financial gain. In a statement that was sent to employees on the 18th of January 2023, Microsoft CEO Satya Nadella disclosed that the business is undertaking changes that will result in 10,000 jobs being terminated by the end of March 2023. By then, Amazon had already cut 18,000 corporate and technology employees globally between November and January 4th, 2023. This was made public by Amazon CEO Andy Jassy in an internal memo after announcing intentions for significant layoffs in mid-November 2022. Even Netflix is currently suffering from a declining subscriber base and had to let go of 2% of its staff in June 2022, citing sluggish revenue as the cause of the company's poor growth. Only for Mark Zuckerberg's Meta to follow suit on the 9th of November 2022. These layoffs affected 13% of Meta's personnel and came after the company's shares had lost 2/3 of their value. In Meta's 18-year existence, this is the first ever mass layoff. With Elon Musk laying off thousands of employees at his companies due to a chronic downturn in demand, it's that bad. But on the second day of 2023, Michael Burry, the Scion Assessment Management founder, tweeted this: "Inflation peaked, but it's not the last peak of the cycle. We are likely to see CPI lower, possibly negative in 2H 2023, and the US in recession by any definition. Fed will cut, and governments will stimulate, and we will have another inflation spike. It's not hard." If there ever was a tweet declaring the financial apocalypse, this was it. In a now deleted tweet, the Scion Assessment Manager founder said, "What strategy will pull us out of this real recession? What forces could pull us so? There are none. So we are looking at an extended, multi-year recession. There don't seem to be many workable solutions for the Federal Reserve and the US government to stimulate development, according to the investor from The Big Short." Michael Burry has alleged in the past that the government pumped money into the economy during the epidemic, fueling inflation, and has issued a warning that this could make it more difficult and expensive to encourage growth in the future, particularly if doing so would result in price increases. Burry has been advocating for a recession for a while. He said in June that when prices and interest rates rise, Americans are borrowing more and conserving less. Michael Burry forecasts a massive multi-year recession, and 70% of Americans believe that one is on the horizon. But how can we take advantage of the financial crisis and recession of 2023 to succeed despite all the bad news? First off, what even is a recession? According to the definition of a recession on Investopedia, it is a severe, pervasive, and protracted decline in economic activity. The length of a recession is determined by measuring it from the peak of the previous expansion to its trough. And recession-related decreases in economic output and employment might spiral out of control with diminishing consumer demand as an illustration. And recessions don't last as long as they do now, albeit they do occur less frequently. Now, the economy frequently reaches a turning point before progressively slowing down. Although the 6 recessions that have occurred since 1980 have averaged less than 10 months, the average US recession since 1857 has lasted 17 months. A recession can be fought off using a number of monetary policy tools that the Fed has at its disposal. Through open market operations, including quantitative easing, the Fed can lower interest rates to boost demand and increase the amount of money in circulation. QE allows the Fed to buy additional types of assets. The Federal Reserve is crucial in regulating the economy. Prior to the Fed, recessions were frequent, and expansions lasted for shorter periods of time. However, partly as a result of Fed policy, the length of the current economic expansion has expanded, and individuals are currently experiencing less recession than in prior years. Although an economic crisis is a time of anxiety and turbulence, it is also the moment when having cash on hand is crucial. That's because you run the danger of defaulting when a recession occurs and less money is coming through the door. Selling your riskier investments and starting to amass wealth is sage and cautious. For instance, Elon Musk sold all of his Bitcoin holdings as his company's financial situation deteriorated. Hold liquid assets. Similar to this, people should start saving money and cutting back on their dangerous investments. Like Buffett, for example. With over $100 billion cash on hand, Warren Buffett is patiently waiting for the right chance to buy potentially valuable companies at a fair to generous asking price. As Michael Burry tweeted on the 14th of December 2022, early 2002 investors were asking me why I was buying WorldCom. Feels like that now. Be more conservative. All asset classes saw a reality check and started collapsing as the economy began to falter and the Fed began quantitative tightening, battening down the hatches and taking extra precautions as they would during a recession. But wide and persistent performance disparities between asset prices and values can develop during recessions. You should rather hold during recessions instead of making hazardous investments. So the best way to prepare for the next recession is to reduce your spending and risky investments as much as you can and get ready for the rainy days. This precaution allows you a ton of flexibility to use cash once more when the circumstances are suitable. So if you want to be ready for the next recession, you must save money continuously. After financial crises, several businesses even file for bankruptcy because money is scarce, and no one ever works for free since we all have stomachs to fill. That's why you always need to be able to move your money around. That's why you need to invest in liquid assets. When you can easily sell an asset and turn it into cash, you can say that that investment is liquid. So any investment that can be quickly turned into cash without significantly affecting its value is said to be liquid. An example would be blue chip stocks. But be careful. Remember the FTX implosion and the billions wiped off in the Terra Luna collapse. But since banks and investors consider liquidity when considering whether to lend money or to invest in a business, having a liquid, blue-chip, cash-like investment during a recession is crucial. Which brings us to our next point. Make wise choices. Make wise choices. The way to take advantage of the recession is to make wise choices that will make you a millionaire. Believe it or not, in times of economic distress, people make fortunes. The appropriate investments can be made at the right time by clever people who take advantage of the situation. During a period when other businesses are stagnant or contracting, you can take advantage of these possibilities to increase your wealth, maintain profits high, and even expand your business or net worth. Asset prices and their true value frequently diverge dramatically during recessions. So, a financial crisis may make an asset appear to be worth $100,000, but for the proper holder, it may actually be worth $1 million. This is what Michael Burry does with stocks. Robert Kiyosaki did exactly this during the housing market meltdown of 2008 and 2009, investing a whopping sum of money in real estate, which is now worth many times what he invested. Seize opportunities. Also note that recessions are advantageous times for career advancement. By taking the lead in challenging circumstances, you can get a nod over your co-workers and advance professionally far more swiftly and effectively. That's because it's in the days of adversity that your resolve is tested. But right now, there's a possibility that the market would decline once more if we experience a recession. In that case, taking your money out of the market before a potential crash would seem like a good move. Stock markets commonly experience declines of at least 30%, so they can be very unpredictable, and even industry specialists are unsure of its future course. But if you don't take your money out right away, it's possible that the market will keep declining and you'll sustain further losses. Or not. Some investors made a lot of money off Bitcoin's latest bounce. On the other hand, you could end up paying less for the exact same investments if you choose to reinvest later. If you're trying to make ends meet due to the present economic climate, and you have debt that you need to pay back, that means you have to be more cautious. It's crucial to pay off debt in the current economic climate, especially variable or high-interest debt. However, if you don't have much of a safety net, saving money may be more crucial during times of economic turmoil. In the end, however, you must consider your particular situation, which is likely different from other people's. Thanks for watching this video. What steps are you taking to stay afloat now? Share with us in the comment section below. Don't forget to leave a like, share, and subscribe to our YouTube channel. See you next time.